What up, guys, and welcome to the coffee shop. Now, this is going to be a little bit political, and I'm just going to let you know that from the start. This is not about indicators. This is not about anything related to that. This is simply about preparing for your morning in the stock market, which is what I'm going to be doing later today. In about an hour and a half, I'll be working with the New York Stock Exchange, doing what I usually do. Now, I did see a news article this morning, and I don't usually follow the news to find out what's happening. However, I did see something this morning that was pertinent to the activity that I'm expecting. Okay, so there was an article that just came out which says that the Chinese banks right now, and this is for you people that are doing Forex, okay, that are be doing Forex today. Today is, today is Wednesday, July 26th. It's about 7:16 a.m. New York time. Now, there was an article that came out which says that the Chinese banks are offloading much of their US dollar holdings, right? And that being said, I was curious to understand, what does that mean for the US dollar value? And what does it have to do with commodities that rely on US dollar value for imports and exports and so on, right? So I wrote this quick little article. I put it below. And yeah, just go ahead and read it. I'll even leave a link. So I would like for you guys to do me a favor. There is going to be a link that shows up right here. Okay. And what I want you to do is I want you to click that link and go and boost this idea on TradingView. That will do me a big favor. Also, like and subscribe to this video. So what does the influence of the Chinese banks offloading the US dollar have to do with the US dollar, right? It's their holdings. So the impact on the US dollar, for example, is like when Chinese banks offload a significant portion of their US dollar holdings, it means there will be a increased supply of US dollars in the foreign exchange market. With more supply and less demand, it's an imbalance. The value of the US dollar would likely decrease. A little bit, a lot of bit, whatever you have you, right? The likely of the US dollar would likely decrease relative to their currencies, to other currencies. In simple terms, the US dollar may depreciate in value, all right? And that's just for this morning during this news release. The US dollar may drop, all right, its value. How you like this little picture I came up with? That's pretty cool. It's the Chinese flag. The U.S. flag is burning back there. Well, it's not burning, but the U.S. dollar is burning, not the U.S. flag. I don't want to get hate for that. Anyway, just as a precaution to YouTube and the algorithm, there are no flags on fire here. Okay, it's simply fire and it's fake money. See, it's not real money. Anyway, so how does this news release impact the New York Stock Exchange? Well, keep in mind, with a weaker dollar value, okay, that can have both positive and negative effects on the New York Stock Exchange, and it depends on what your position is as a company, okay? On the positive side, a weaker U.S. dollar can boost exports for U.S. companies as their products and services become more competitive in international markets, okay? This can lead to increased revenues and potentially higher stock prices for exporters, okay? Because it takes less for them to actually do their job, all right? But on the negative side, a weaker US dollar, that's if the dollar goes up, right? A weaker US dollar can lead to higher import costs, okay? As it becomes more expensive for U.S. companies to purchase goods and services from foreign companies. In other words, our U.S. dollar is worth $1, but to other countries, our U.S. dollar is not worth $1. It's worth several dollars. So we have to take more out of pocket to get the goods and services that we need from overseas companies and import them. So a weaker US dollar can lead to higher prices on import goods, right, from foreign countries. Now, this could put pressure on their profit margins and could negatively affect stock prices for companies heavily reliant on imports. So just keep that in mind. If you are an importer or if you are trading with a company that deals heavily with imports, well, then the US dollar really isn't going to hold much weight for carrying those commodities, into our borders. So just watch out for that. So just want to give you guys a quick little heads up, let you know what I feel you're in for in the New York Stock Exchange this morning. Again, it is relative to the commodities and currencies that you are trading with. Okay, gold is worldwide. There's no import export for it. But for example, if you are trading semiconductor or parts for Tesla or things like that, things that are, if you're in the U.S. and you're relying on U.S. companies, but you want to be trading with a company, trading the value of a company that heavily relies on imports, well, that company may be suffering this morning. So you're probably looking for a lot of shorts, right? You're looking for some little boosts, little rallies, but you're probably looking for some big bearish moves on import companies. Okay, so just a heads up, everybody. Any questions, drop them below. Do me a favor, hit that link, and do me a favor and boost that over on TradingView. Feel free to follow me, like, and subscribe to this video. We've got more on the way. Peace out, peeps. Also, that is the Smart Money Concepts indicator that I'm working on in the background. It's doing really nicely. Later today, it'll be drawing out zones and support and resistance, which I call, what did I call it? Evolutionary support and resistance. And you'll see why. Later, peeps. Welcome to the coffee shop.